Kapin from Secrets, the channel for learning about trading and investing. Welcome to weekly stock market analysis, where we look at the technical charts and try to understand what happened in the market with the previous week, and also plan for a better trading week ahead. That's starting from tomorrow, October 13th, Monday 2025. Let's get into the charts right away. Here we have the weekly charts of the Nifty that you see on the left side, and on the right side we have the daily charts of the Nifty, and you see that on a medium term basis, price has been within this trendline channel, parallel channel, and seems to have bounced up after a sharp fall 2 weeks back, and a small bullish candle is formed. In the short term daily charts, we see that there is a trend line and there is another trend line in flag formation, and price is almost near to the breakout zone, but not at there. So that's what Nifty is all about. And Banknifty, you see that it's narrowing as it emerged since long time, and solid two bullish candles, and once again looks like it's heading towards the all-time high, very close by. In the charts of the Banknifty, you see it again. There's a flag formation within the parallel trendline channel, and price seems to have formed a solid bullish candle above the flag or above the channel, heading towards making two all-time high, new all-time highs. Looks like so. Solid bullish thickness all over on the charts. So candlestick wise, if you see, it says wide range bullish candle on Nifty and the Banknifty. Nifty has got a good gap up as well, forming a gap support on the downside. So that's very bullish. You can see that in the Nifty you have a resistance that's coming close by at 25, 500, 600 zones, and the Banknifty also. And resistance will be the zone of the new of the previous all-time high. So resistance are close by, but the market seems to have made a continuation of the up move this week as well. Previous week's bounce up from the sharp fall. And daily charts will help us understand that the previous week, except for one day in the Wednesday, except that it was clear up move that is happening. You can see that on the Wednesday you have the red candle, but otherwise it was a big breakout move that has happened on almost all days. So Nifty and the Banknifty has got a gap, as I said, that could act as support on the way down. Bollinger Bands again is showing that its expansion is beginning on the Nifty and the Banknifty on the upside. Very clear expansion with bullish bias above the median of the Bollinger Bands, so that indicates that more up move could be following. So let's wrap it up. What exactly happened? So it's at 1.56%. That's nearly 389 points to be precise. Is the kind of move that has happened last week on the Nifty, and the price moving about the 20 expansion moving average, and you've seen that it is 70.23% of correction after 70% of the rally in the last 3 years. So Banknifty also tried to move up with strength. Actually, it also continued the bounce up. Actually, it was not a bounce up. Also continued the previous week bounce up with more strength, right? And closed positive with 1.83. That's more than 1,000 points of up move is what is active. So basically it's a very good bullish move that's already seen from the charts. So I was just trying to mention the exact amount of the fall that happened and the corrections accordingly. Candlestick, you already seen that it's bullish candle. So basically it was a breakout. We know that Bollinger Bands also we see. Now let's move on and try to understand what the RSI and the ADX, the momentum and the trend indicators are showing in the medium term and the medium term as well as the short term. So it's bullish on the short term. You can see that in the charts here. So it's a bullishness that is there in both the charts, Nifty and Banknifty, and it's sideways momentum in the case of both of them in the case of weekly charts. So short term bullishness and medium term sideways move is what the momentum is done last week. That is a big move for this week. The trend indicator ADX is showing that it's basically continue to be, rather it has turned to be bullish on medium as well as short term, with rising strength as well. That's a big thing, especially the Banknifty. So falling strength in the bullishness is only seen in the weekly time frames on the Nifty, but Banknifty is rising trend strength. So trend is turned bullish, but momentum is yet to pick up to climb the bull zones in the case of Nifty, but Banknifty has already done that. Now about volatility, the measure of volatility is the fear and greed index, that's India weeks. India weeks has a flattish move. Remember, it is in the historic low times of 10 and below that, and now it is slightly spiked, slightly point less than 1%. That's not even a spike. So that gives a huge risk of a big spike up that could happen in case of anything going wrong. So related traders has to be cautious about that. But as of now, low weeks means low fear, but any small fear could big rise in the big scenarios, and that could happen potentially on the next Monday. That's tomorrow morning. That could happen because of the bad news that is coming from the Trump tariffs to the China and all that. Let's try to understand what happened last week on the opening analysis, showing a short covering and a little long build up in the Banknifty. So overall, it seems to be bullish build up that has happened, and what has happened in the US market is following the closure of our markets. The night is where the US market corrected. So the data that is shown here is the build up that is seen on Friday in our markets, and that shows for the weekly Nifty options and futures high, right? Weekly options and futures high, and for Banknifty it's our monthly in October 28th one. The PCI is bullish on 1.4, extremely bullish, and 1.1 the Banknifty is also bullish. So bullishness in the charts and bullishness reflecting the open interest betting as well. So what we're trying to understand support resistance is using the open interest. So currently 25,200, 26,000 is a very wide range where the highest put rating and the call rating is seen. That's where the highest support and call and resistance is seen. The second highest support and resistance is at 25,000, 25,500. And for the Banknifty, 57,000 is what the monthly support and resistance both seems to be. After that, second highest support and resistance is set puts and call rating is at 56,000, 58, very wide range again there, but that's a monthly expand. So overall, a very wide range of volatility could be expected is what the options trading also is talking about. Now looking at the technical charts, it's another way of trying to find the resistance and supports of the indices. On the Nifty, if you see, the first resistance will be a breakout from this trend line. This is entirely a resistance zone that it has climbed into. There is a parallel channel, there is rectangle of previous resistance zone. So it has to climb above and close above 25,500 for anything to be anything like a breakout to happen. But this is a triple bottom that has happened. Probably it may break out, you never know, but patterns are bullish. Definitely the levels, first resistance would be 25,333 and then 25,450 and then 25,670 and then 25,740 and then 25,840. That's all the resistance in the upside. These are gaps of previous swing highs and supports. Similarly, but the first support would be the previous swing low that's formed. That the 25,000 is going to be very good support, and then 20,500 or that's expansion will be major support. So the major support is going to be 24,587, which is the major previous swing low. Second swing low after this 25,000 is breached, right? So those levels are clearly marked. You make a note of that. Pause the video and make a note of these levels. RN is rounding number, GAP is gap, and FPS is producing highs, Fib is Fibonacci, and DNA is daily expansion moving average, PSL is producing lows for understanding. So moving in flows, if you look, it seems to be breaking out of that flag or parallel trendline channel, and then the resistance is right up there at 57,000. 50,000 is producing highs, and then 57,363 and 57,628 with all-time highs on the downside. Previous lows at 55,800 and 35 would be a good support if that breaches. Then 2050 and 100 expansion moving averages that comes in at 55,350, 55,000 and 55,500 nearby. All this 500 point zone is where the supports of the moving averages are, the expansion moving average, and if that is breached, then it goes to 54,000 rounding number and 54,226 where the previous lows are there. If it falls, cracks down to an expansion moving average is seen way down at 53,620. Levels are clearly explained here on Nifty and Banknifty as well. We can have a look at that later, but let's move on and try to understand what the sectoral indices have done. So sectoral indices also, if you see, the 90 sector seemed to attempt to move up with a 5% up move, near to 5% up move. Otherwise, the reality also has done 2.35, but the FMCG pharma, auto and the metal has gone flattish moves. So pharma probably made a 2% up move. So auto, metal and FMCG is like flattish moves. So what is worth painting on the long side is only the metal till. Metal continues to be bullish on both time frames as per the momentum is concerned. It is attempting to move up, but we'll need to close watch until the momentum climbs me sideways with the bullish notes. These are the charts present. You can have a look. Reality is within a trendline channel, which is also a flag, and momentum is sideways, and FMCG is at the edge of breaking down that parallel channel. Let us keep a close watch. Auto sector is on the top, and pharma is also on the Downside bottom of the trend line channel with good supports really close by. But what is shining is the metal. Metal is shining. I didn't recovery attempt, but it has just bounced up from the RSI 40 and then maintaining the sideways mode as well instead of falling down with the bear zone again. So that's positive in the IT, but metal is shining and others are all sideways. Overall sideways consolidation is what is happening in different sector analysis. If we look at the heavyweights, the City Bank had done a good bounce off the second week, just like the index have done, but momentum is sideways and prices remain in the bear zone for the medium term. Reliance also showing green but sideways momentum. City Bank showing green but sideways. All three major heavyweights are showing sideways consolidation. TCS is not yet recovered, it remains with the bear zones, but Infosys has managed to climb up with a bullish momentum and sort of green candle, but with the trend line, bright does not happen. Kodak Bank, as usual, it's moving up and down. 2 weeks of solid green candle shown this time, but it's a counter stock and moves within a range. IDC is remaining sideways again with the logic end of this C candle. It's in the bottom of the consolidation support zone. So overall, everything is sideways. It's what you can see. All the green moves are seen on the major weights. Just like the hedge sector wise also, everything seems to be sideways except for the metal. So things have to improve for a breakout to happen. It does not have happened. No, we'll have to keep close watch is what it is. Mid cap, look at this solid green candle is in, but momentum is sideways. A breakout could happen, but long way to go before it gets confirmation on that. It's mid cap and the small back indices that you're seeing on the screen. Now, institutional participation phase, FIs have turned to be net bias. I'm sorry, I'm correcting this. It's nearly 3,000 crores of buying that has happened after a very, very long time, probably months to FIs have turned to a bias. But you never know whether tomorrow they're going to be sellers following the US market crash. On the trend tariffs and all that. The domestic as usual has been made, but they bought a little less, 8,300 crores. So net longs and derivatives in the FI side were moved up last week basically. So FIs were bullish as of Friday on the Indian market. So let's move on and try to understand what the global markets, especially the US market, did last Friday night and how the gold and the US currency pairs are all performing and what, how the crude oil performs and all that. Very interesting. Dow index is has spiked up 1.2%, of course. There is sideways momentum, and rupee has become weak once again at historic low levels of 88.73, but it's a flattish up that you're seeing. So nothing too much to say about that, since rupee still remains to be below the hundreds. This level is probably not correct. It's probably 98. I'll quickly see that. Sorry, it's 98.85. That's correction there. 98.45 is where the dollar index is, right? So it still remains out of the hundreds, okay. But it is rising is not that great, but it's a flattish up, just 1%. Crude oil has been has gone below the 60, which is unusually low. That's probably because of the Gaza deal or something. But that's good for the emerging market like us. But rupee getting weaker every day and remaining weak there is not that great news for the emerging market like India. Gold is breaking out, making new highs every single day, and it's a 3.4% move in bullish momentum, online 50% from the lowest low of 2 years back. Now, US market, that's where the drama happened after our Indian market was a solid big fall of more than 2% on all, 2.78% on Dow Jones and 2.3% down on Nasdaq and 2.5% downfall on S&P 500. Momentum is bullish, but it's funny. That's what actual stories are for the US market. So this could have an impact on the Indian market as well. But the market is going to digest that and then recover is something a lot to keep a close. But tomorrow morning gap down could be expected given the fact that the mother market is not. So overall, there is some risk in the US market fall, and gold extremely high is also a concern. Whether people are shifting money from the stock market to gold or not. Crude low is positive and the US. So it's a mixed bag, but overall the US market sudden quick crash down is a worry, and whether that worry could get contained is what we have to close watch as I said before. Let's get into actionables. Again, these are not recommendations at all, so just chart study and education purpose. Taking a risk is your own risk and your own money, your own risk appetite, your own research. This is just education purpose. On the other side, I have the trend. Trend is a Tata company, retail arm, and there is a potential that it can go down below towards the bottom of that trend line channel. That could give you easily a 1:2 risk reward and can trail the profits. Have tight stop losses though. The reason is momentum is bullish, trend is bearish, trend is bearish. Volumes are good, right? Such a short side, and right side you have Vedanta metal is shining, so it could move further. The one is choose score because momentum is climbing in the bull zones. Trend also turns in bull zones, and volumes are good enough. Vedanta metal stock on the short on the long side, and trend the retail arm on the long side. These are the two stock picks actionables. Potential actionables, but trade recommendations to be precise. Let's see one more actionable in the FNO space. Nifty weekly index. If you do a bad plan without not fully hedged, like buy inside hedges and outside OTMs, if you sell, you will get a 86% profit if not, and this is risk reward. If the market remains in a 2 USD standard deviation levels between 24,400 and 25,730, and if it breaches, just get out and so trying to adjust, right? So that's the Batman strategy in the Nifty options that you're seeing. Let's wrap it up. Market continue to move from the previous week's recovery, and it has managed to close green, although in the post market hours there is trouble in the US market which cracked down. But now market managed to close on Friday with positive, and the first tend to be net bias after a very long time. So Trump tariffs could create some crisis in our markets as well, could reflect, but how our market is going to deal that you have to wait and watch. So one way to come to a view is to look at the charts technically, and then use our resistances. That's how that's now had. So we bucket with the different parameters that we already studied in the previous slides into the bucket of bulls and in favor of the bears. Looks like it's a mix. It's a balance more in the favor of the bulls because of interest. The options and futures above are bullish. Mix is low. Banknifty is very strong, bullish candle, breakout is seen, and multi bands are showing expansion with bullish price on both indices, and trend seems to be bullish. Prices above the trend expansion moving average. That has a trend bias. What is you need is fully in favor of the bulls chartically. But what is what bears? A shorter momentum remains like this. It's still not bullish. The sector indices are maintaining that sideways momentum right after the start of sharp fall. Hope it remains to be weak. Major heavyweight stocks are hanging on. They are not climbing to the bull zones yet. So that takes away the advantage of the bulls that we are talking about. US tariffs on China had a huge impact in the US market. China has not reacted. It could have impacted the Chinese market as well. So indirectly, our market also will have a sell-off that can happen just like the US market. So, but eventually, the end of play, how is the closing is what you'll have to see. So it's cautiously bullish as per the charts. I can only be bullish because charts are saying that, but we know that US market will reflect in fall will reflect in the price on Monday. So if you're in derivatives, then we may have tough time adjusting when our gap ups on Monday happen. So always keep in mind that technically you can understand the probability of support resistance. That's all. In the rest, any black swings that happen on weekends or any day, it's out of power. But still, you need to understand where market could find supports, psychological support and resistance, what can be understood well. So as per me, 25,500 is the levels where the market could remain next week. 54,000 and 57,000 is where the bank will remain next week. But anything above 27,000 and 57,000 is good, and that could probably potentially turn out to be a continuation of the rally in the next leg. But until then, it's still correcting and adjusting and consolidating. That's all. So always hedge your positions, manage your risk is all trading is all about. Cover your positions with hedges on positions and portfolio both, right? And also you can make some money using hedging strategies like cash cover, put and all that. You can check the playlist for that. That's all I have. If you like the content, you can subscribe and then share to friends and colleagues. You can put your feedback and all that. I'm also active on the X. You can probably do that. Subscribe to that as well. Thanks for watching. Happy trading, happy investing, happy learning. Bye bye.